as much as the rich and the banks, how much financial power they have, how much monetary power they have, the public has way more power than them because there's just so much more of us. So when we wake up, we really bring silver up there.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 20th through May 27th, 2024 while supplies last. First, we feature pre-1933 XF $20 gold Liberty coins at just $25 over a 1-ounce spot. We also have backdated silver 1-ounce Philharmonics at $3.15 over spot. And finally, we have the hard-to-find silver half-ounce Canadian polar bears at the very competitive price of just $2.50 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor, now on Substack. Rafi, thank you so much for your time today.
Thanks for having me on again, Elijah. Good to be back.
It's great to have you. I did want to discuss kind of the elephant in the room right now. Obviously, silver has traded above the $30 mark. We've really held above that for this past week. Your take on where we are?
I don't know exactly where we are, but we are not where we were with silver squeeze, even though we are there numerically in the dollar range. We're not there in terms of excitement, which gives us a lot more fuel to the rise, right? Like not slope of a wall of worry, right? Wall of worry. You have more fuel the less people know about it. Premiums are down. I think junk silver's at 9% as opposed to what it was at the top of like 45%. And ETFs are still draining. SLV is still very low holdings. So we're at the very beginning here. And even though we're at 30, we're still not quite through resistance on a silver versus commodities scale, right? So you can look at silver being 30 and be like, oh yeah, silver's in a bull market. But if it's not higher than other commodities or relative to other commodities, then we're not really in a silver bull market. We're just in a commodities bull market. So we're at a resistance in silver versus commodities right now. And the only time it was higher than this was during the lockdown period when things were a little bit nutty. So if we just cut that out and say, that was insanity, and look at normal-ish, at least in context of what normal seems to us, which is pretty weird anyway, then we are at a triple top resistance. And once we break through that, then I think silver will be in a bull market in terms of other commodities. So that's where I think we are. And we should see the gold to silver ratio descend as price inflation gets worse and worse. Maybe we'll talk about this later because as I was doing some research and I saw that George Gammon had made a video of trying to exchange gold and silver in Argentina. And he found that silver was actually a lot more liquid than gold. He couldn't get currency. He couldn't get a functional currency in exchange for gold at market anywhere near market levels, which makes sense because gold for a consumer is not very liquid. It's liquid for banks for bank money, but on a consumer level, you'll need silver, which is why when gold derivatives no longer work or currencies, we call them, when they no longer work, you're going to have to go to silver, and that's going to be the market force that drives us closer to a 15-to-1 ratio.
I think that gets back to, that really the people's money is silver, right? And that is the investment or the currency that people run to in times of crisis. The big players move into gold and then the common man really moves into silver. And that's one of the reasons why it runs so fast, so quickly at the end of the bull market.
Yeah, that's what happened in the last 3 times. So 115-to-1. It's what's going to happen now, because really it's the public waking up all at the same time. And is as much as the 1%, I don't even like to use that term because it's political, but as much as the rich and the banks, how much financial power they have, how much monetary power they have, the public has way more power than them because there's just so much more of us. So when we wake up, we really bring silver up there. And the first real crime against the monetary system was 1873. Not many people know that because no one was alive for that. It was 151 years ago. And interesting, I'm reading this diary now of the Great Depression, written by a guy named Benjamin Rafi in the 1930s, working class lawyer in Youngstown, Ohio, in the 1930s. Not an economist, not writing from an academic perspective at all. And he was talking about the daughter of William Jennings Bryan. I forgot what her name was. But she was saying, oh, this is what my father was saying. If we go off the bimetallic standard, if we go off the silver standard, this is going to happen. And we got to go back to silver. And then Benjamin Rafi is like, I got to read about this. I have to understand what she's talking about and what this free silver movement is and what a bimetallic. And then he reads the whole – there's this one entry where he's like – he reads all these books about it and all these economist books and monetary books. He's like, I've come to the conclusion nobody knows what they're talking about. Same thing now.
It seems like the same thing now. I know we saw the interview that was concerning with Jared Bernstein talking about how he doesn't really understand how money is created or how it flows through the economy. And he's one of the top economic advisors for President Biden. So that was a bit concerning there. And
it's like one of these Ayn Rand nightmares, something straight out of Atlas Shrugged. It's like she could have written that. And we would have just said, oh, like Ayn Rand, you're such a bad writer. This would never happen. And, sometimes she is annoying that way, but I guess it does happen.
Coming back to the precious metal markets here, I know you have been doing also some research on the Asian financial crisis. The last time we saw one, and now that there are murmurs that another one is coming. Now, last time we saw one, we saw a spike in silver prices. Most people didn't recognize it. It was quite a while ago. Can you share what your research has shown and kind of what this might mean for silver prices going forward?
Yeah, so what brought me in this direction, I think Alistair McLeod wrote about this a few times, of premiums in China and how China is taking over the pricing of silver. Maybe that's true. I don't know. He's more of an expert on that angle of the market than I am. But I looked at, from Gold Charts R Us, the website, and I took a look at Chinese premiums, Shanghai over New York, and then tried to correlate them with the silver price. I couldn't find any correlation. Sometimes there was a discount, sometimes silver prices were high, sometimes there was a Chinese premium, and other times silver prices were low. I mean, it was really hard to tell. But then I was like, okay, so Asia, and Alistair was saying that the Chinese are getting worried because we're on the brink of some kind of Asian financial crisis. If you look at the yen. So I was like, okay, so what happened to silver in the last Asian financial crisis? So I went back to 1997, and I saw that the Asian financial crisis really kicked off in 1997, in July 1997, with the devaluation of the baht. Right? It comes from these corners that people don't even know what a baht is, or they can't even locate Thailand. It's the currency of Thailand. So they devalued, and then that led to a whole bunch of other devaluations of these small Asian countries. And then when you devalue a currency, it just means you're printing more of it. And then the purchasing power goes down. So if the purchasing power of the currency goes down, then the purchasing power of the money itself, which is gold and silver, goes up. So what was silver doing back then? Well, it was doubling. From July 1997, from the very point, that was when silver bottomed. From that point until, a few months later, maybe 6-7 months later, silver had doubled from about 420 to 740. Not quite doubling, but close. So with the yen back at 157 per dollar, about 3 weeks after this big Bank of Japan intervention, right, that cost something like $60 billion, that they're burning through their dollar cash reserves. So now we're back weak and on the yen. And if the yen weakens anymore, then Japan's main trading partners in Asia are going to have trade imbalances that they can't deal with politically, and their exporters will get upset, and then they have to devalue in order to keep pace with the yen. And so you have a competitive devaluation in Asian currencies. And what's going to happen? I mean, the Asians are going to go for silver like they did last time. Last time it didn't last very long, but this time there's no dollar to fall back on, so it could be even more extreme. I don't know when it's going to start or if it has already started. This is why I watch the yen closely, and history is going to repeat itself. It always does. Not exactly the same way, but we can expect the metals to go higher. And just, as always, you've got to be patient and understand the logic of what's playing out.
Now, if there was a devaluation of the baht, but we saw a rise in the price of silver in US dollars. So why did that happen? Why was it that a devaluation of another currency causes silver to rise in the US dollar?
I'm guessing, I mean, I haven't been able to do full research on this, but if there is a devaluation of currencies in Asia and their response is to buy silver, then silver is a global commodity. It'll go up in all currencies. So that's what I'm thinking. I can't confirm that, but why else would it go up? If there's a financial crisis somewhere, not just in one country like Thailand, that Thailand's not big enough, but if it spreads to Russia and in Asia and China and Japan, and then they're all demanding more silver because they're getting nervous, whether it's banks or traders demanding contracts or derivatives of silver, or I would guess that the physical demand was kind of low, but something of silver, then the price would go up if the currency is in trouble.
Now, I know you've mentioned before that really a lot of people talk about these other currencies, but at the end of the day, right now, we're kind of on a dollar standard. These currencies are in some sense backed by the US dollar. How do you see that currency crisis then playing out? And also, what does that mean for precious metal prices?
You mean if there is a competitive devaluation in Asian currencies and they are backed by the dollar in the sense that these Asian central banks have dollar reserves, right? So there's probably going to be a rush towards dollars. That doesn't mean that gold and silver prices are going to go down much, because there's a rush to gold and silver now among at least the banks or the financial players, not necessarily the public yet. So I would expect the dollar to strengthen and relative to those currencies, and gold and silver to strengthen relative to the dollar, which is what we've been seeing. Right. If you look at least over a longer term, it was 5 or 10 years. I haven't looked at the chart in a while, but if you look at the dollar index versus gold and silver, the dollar index is doing pretty well. What is it, like 106, 107? I don't remember the number, but that's historically pretty high compared to what it's been since 2005, 2006. So we have a stronger dollar relative to other currencies, and we have gold and silver, gold at record highs and silver at levels that it's not at very often at all. So we'll continue to see that, right? We'll continue to see the dollar strengthening relative to other currencies, but the metal's not really caring and just going up anyway.
It's so interesting when people talk about a strong dollar, right? And the dollar is so strong. Well, as you mentioned, it's only strong relative to other currencies that are falling as well in value. So if you test everything or compare everything to gold, all the currencies are falling at the same time.
Yeah, well, gold is the money, and the rest are derivatives of it, in one way or another. This is what I try to clarify. I try to get people to think in these terms. That the main gold derivative is the dollar. It used to be a silver/gold derivative before 1873. Now it's strictly a gold derivative, which is itself is unjust and suggests that the end game is not going to be us going back on a gold standard. It's going to be us going back on free market money of a silver currency and a gold currency that's 100% back. That's how I see it. And I see all the central banks being kicked out and laughed off, or maybe something violent happens. I don't know, but I think people are going to be pretty upset. So, it's not going to be good for them.
Well, no, I mean, to that point, that a lot of people will be upset about what is actually happening in the financial system. I know I was talking with a friend just yesterday, and we were talking about how, what the Federal Reserve is doing, creating more money, and really all central banks around the world, what they do is create more currency. And it's just a form of theft, right? We talk about inflation, we talk about expansion of the money supply, but really it's just theft. It's taking value away from of the rest of the currency in circulation. And when the mainstream really wakes up to that, almost no one understands how this actually works. But when the mainstream wakes up to that, it seems like there has to be a rush towards something of real value.
That's how I try to boil it down all the time, that this is all theft. And the objective of modern economics, especially since Keynes, but even before that, right, since post Adam Smith, is really how can we manipulate the monetary system, just steal just the right amount of money that we can make our society look richer than it is when we're really borrowing from the future by stealing from everybody. And all the academic jargon around messing with the money supply and interest rates and this and that is really goes to that question, like how long can we fool people into thinking they're richer before they figure it out? And then everyone gets surprised when everyone finally figures it out and they realize that they're poor, that we have a crash. And then people are like, well, how did that happen? Well, the natural consequence of stealing from somebody else is that the society is poorer, because when it comes down to it, the most basic sense, either you're going to trade and you're both going to get richer on exchange, or one person's going to steal from another person, and then that person's going to have less at the expense of the other guy, and society is going to be poorer on balance, because the guy who gets stolen from is going to stop making stuff, and then there's going to be nothing for the other guy to steal if you just take it down to a society of two people. Either you're going to trade or you're going to steal from each other. If you steal from each other, you're both going to starve. If you trade, you're going to get richer. That's basically it. And everything else is just circling around that logic and making it academically palatable for the intellectual bodyguard of the Hohenzollern, as Rothbard puts it.
And we've talked about this before, how really the mainstream is not paying a lot of attention, even as we see gold at all-time highs, silver breaking above that critical $30 level. Very little interest from the mainstream. They're mainly talking about, 40,000 Dow and all of that. Your take on that, kind of how early we are in this cycle of the precious metal bull market, right? And how the mainstream has not jumped in yet.
Well, that makes sense, because most of them are invested in these assets, in stocks and tech stocks and whatever it is. They log into their brokerage accounts on Interactive Brokers or TD Ameritrade, and they see a dollar number there, and they imagine how much wealth they could purchase with that stuff, with those dollars that they say that their brokerage accounts are worth. So why would anyone care what the price of gold and silver are if they're doing fine, right? They really start panicking, or at least before they panic, they get interested in gold and silver. When is that? When their stocks aren't doing so well, right? And their brokerage accounts are a lot less than they thought they would be. And then they suddenly realize they're like, well, gold and silver are heading higher, and inflation is what they call inflation, right? Rising consumer prices are getting worse. And these gold bugs are suddenly they're increasing their purchasing power. Maybe I should look at that. But there's no reason for them to even look at it. If, let's say, gold was $400 an ounce and the Dow was, instead of 40,000, 400,000, they still wouldn't look at it. That's to do with the ratio. And if you look at the ratio of silver or gold to stocks are still doing much better than gold since very much since 2011. But even recently, it's still very, very low. That's why the panic will really come all at once, as it did not all at once on the same day, but it'll come like a snowball. And once the Dow to gold ratio, or the S&P to gold ratio, whatever ratio you want to choose, once gold really starts outperforming, and incidentally, it has been outperforming since 1971. If you look at a chart of gold versus stocks versus the Dow, since 1971, gold is outperforming, but not since 2011, the last 12, 13 years. Once that changes, you'll get a change of heart from the public, the investing public. But it's not going to happen until stocks really start struggling, or inflation eats into the value of their portfolios to such a degree that it doesn't even matter that stocks are rising.
Now, yesterday, we're recording this on Friday. Yesterday, we did see the worst day for the Dow this whole year. Do you think this time of where stocks really start struggling, as you mentioned, is here, or is going to happen sometime soon?
I can't tell. Look, to make a confession, the monetary aggregates have been so confusing to me since COVID, I was taught by Bob Wenzel of Economic Policy Journal, the late Bob Wenzel. He passed away in May 2021, and he would calculate the monetary aggregates in terms of the quarterly annualized money supply growth rate. And if it was high, then he would say stocks are going to do well, and if it was low, he'd say stocks are going to crash soon. And he was generally right. But since COVID, it just went vertical, and now we have this overhang. So how do you calculate it? And we still have about $500 billion left in the reverse repos that are supposed to still, filter into the money supply at some point. So I'm really at a loss as to how to calculate the money supply anymore and how it would affect stocks. But look, I do know that it's not growing. Right? It's not growing anymore since 2021. The question is how much more debt can be piled on to keep the aggregates going up and up or up high enough to keep stocks elevated. But look, I know that at some point soon it's going to stop because this can't go on. In terms of nailing it down to a time frame, I've been trying to do that since COVID and it hasn't worked. So I'm just going to stay out of the casino because at this point I don't get it, and it's going to end at some point because economics is the study of scarcity and choice, and people can't all be rich at the same time, especially when the government is spending so much resources on blowing things up.
Now, while the mainstream is not really paying attention to this, we have seen outflows of metal from ETFs. We've seen the exchanges, the LBMA, the COMEX being drained of physical metal. But it seems like at the same time, it's very weird. There's different dynamics here. Obviously, we're seeing a lot of demand from the East as well, but then also on the retail side, not a whole lot of demand. So how do you kind of look at those three aspects? The retail side, not a lot of demand, a lot of outflows of physical metal from the exchanges, ETFs, and also a lot of demand in the East. Why are they so, different? It's almost like three completely different worlds there.
Okay, so you have retail. I assume you mean retail demand in the West, and premiums are low. Stocks are doing well, so people with enough money to buy gold and silver with, they're looking at their brokerage accounts and they're saying, "Oh, this is fine. I don't have to protect myself, so demand is low." And I'd say the metals are being drained from the big centers. From the big metal stock centers. Why is that? It could be, big hedge funds, not hedge funds. They don't invest in physical, but big banks, calling in warrants and putting them into eligible and taking them off for sale. And maybe they want to store them for a while and sell them later at a bigger profit. But in the East, I know China's stock market has been doing very poorly. And, I wish I knew what was going on there. I'd have to go visit, but I don't really want to go because China scares me. So I would assume that the public there is a little bit more wary of false prosperity now that their brokerage accounts have been going down. So they also have a stronger tradition with physical metals than Americans do. We haven't had big gold culture since, I don't know, the 1920s, 1930s when FDR took it all. So that's my guess as to the three prongs of this strange market. But it's all going to come together in the end, and everyone's going to want physical, whether you're a bank or an individual or in the East or the West. Right now it's morphing, and you have this blob going up in different directions, but at some point it's going to become resonant, and like singing in a shower, it's going to bounce off itself, and these waves are going to start matching, and then you're going to have a glorious sound of gold and silver bugs all abandoning all currencies at the same time.
All right. Well, Rafi, Farber, really appreciate your time today. If our viewers are interested in learning more, they can go to the Endgame Investor on Substack. We'll put a link in the description of this video. Do you have any last thoughts for our viewers, and what can our viewers find on your Substack channel?
Well, I try to get people into the right mindset, into thinking about money correctly, so that it, let's say, vaccinates you or immunizes you against people who say that the dollar is real money, and every time that gold goes down or silver goes down and you feel a little bit of a pang of panic, maybe they're right. Maybe the dollar goes on forever. It immunizes you against those kinds of thoughts, because my specialty is getting the logic down. And once you get that, these price movements, they can be a little bit emotionally unsettling, but they won't cause a panic or cause you to doubt the conclusion anymore. So that's what I do. If you want to understand in a deep way what money really is, then take a stroll onto Endgame Investor at Substack, and any deep philosophical monetary article that really explains these things I keep free, so you don't have to pay for those. And if you want to follow more on a day-to-day basis what I'm seeing in the markets, then I think it's like $20 a month or something like that. And I hope to see you there.
Fantastic. Rafi, we really appreciate your time. Thank you so much, and God bless.
You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 20th through May 27th, 2024, while supplies last. First, we feature pre-1933 XF $20 gold Liberty coins at just $25 over a 1-ounce spot. We also have backdated silver 1-ounce Philharmonics at $3.15 over spot. And finally, we have the hard-to-find silver half-ounce Canadian polar bears at the very competitive price of just $2.50 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.